Mm-hmm. Mm-hmm. Mm-hmm.
Woo, welcome
Let's
back,
go.
traders. How we doing, guys? God bless.
to a
Each and
little
every single
bit
one,
of
guys. Hope
drool.
you're
I'ma
having a
pull up, feel
stand-up
like it's the
freaking
weekend.
Tuesday in these bloody markets. As Aron didn't even offer me dinner yet, but freaking demolished the stock on a offering that was a surprise offering, right? Offering shares at a 25% decrease. What were you down today? 24.64%, as he looks to sell 95.25 million shares at the price of $2.10, right, when we were trading at around, I think, $3 to $2.90. So at a pretty sizable discount, looking to raise 200 million shares, 189 million after fees. Expected to close tomorrow. So that's going to be interesting to see what we do tomorrow, as you're already down 25% on pretty stark volume, as shares kind of and shareholders kind of readjust their positions, anchoring for potential or certain dilution, right? But what you've done here is kind of bullish, and I know that sounds pretty foreign. So before we jump into it, guys, just slap that freaking subscribe button, give us a woo for Kyle Jones, and hit the like button. Stay the full length of the video, yada, yada, yada. Do what you got to do to help the algorithm push AMC in these dire times. We'll be talking about AMC, GameStop, the Jimmy warrants, and the broader market, right? So let's jump straight into the technical analysis and just look at this. Just look at this candle, right? Down 24%, and you finished with a hanging man candle. So typically those are bearish candlestick formations, right? That's a good example of one right here. When you saw negative 1.61% and then a follow through of 8% to the downside. But what you've done here is kind of significant, right? When you look at where you wicked to, I feel like there's a very specific reason that you've wicked to the location that you have, right? Look at the 200-day EMA, currently sitting at 197, traders. We've held above that so far. Don't do this to me, Aron. Don't do it, right? You are about to get your most important technical landmark since 2020, 2021, guys. Holding this momentum here, bouncing off the 200 and going to fill the newly formed gap at 273, traders, would be monumental, and for me would confirm that you're in a bullish uptrend here to potentially get this golden cross, right? If you do not see this thing hold, it's likely to come down to the 50-day EMA sitting at 183, and you should have some pretty stark resistance or new support at 175, right? We've always talked about this resistance at 175 that you rejected back here in January 12th of 2026. Found a blast through, failed to hold, retested here, blasted through, retested, blasted up, right? So 175 should be a technical launch pad for this stock. But even if you do not hold any of that, traders, let's say it's the worst case scenario, this thing is dumping off of this news, you do still have this potential uptrend in support, right? This rising support trend that you made back from March, May, and potentially July, right? So if you did that, you would see a bullish catalyst or bullish formation play through, right? This is what you call the three rising valleys, where you make a higher high, higher low, higher high. Whoops, that's a much higher high. And then a higher low here would potentially lead to another higher high. So even if that happens, guys, I am still bullish. And even if you don't hold that trend line, guys, even though that would not be good, you do have a gap fill currently sitting at 112. So even if you come down to 112, I am still bullish. You really don't want to see that, right? You want to see this momentum hold above the 200-day EMA, and it's even more correlation to see where you bounced, because your low on the day was 193. What was your high back here, right? 194. So you are perfectly retesting previous highs as new support, traders. Previous resistance, new freaking support. And that's what you want to see as this thing continues to stair step higher. Now, the volume on the day, of course, is going to be ridiculously high as you see this breakout news. On the weekly time frame, though, you're still less than the previous volume node, and you're retesting the 9-day EMA on the weekly time frame. Hopefully, if you could see this thing close higher than you currently are, right? You want to close above 2 schmeckles or 2 buck-a-roonies. Doing so, in my opinion, keeps your bullish sentiment on the stock and keeps you in the road forward to get this golden cross and in the freaking right direction to fill this gap at 273, which I do think you will fill, right? You just need to see this offering close out, right? You need to see this close out tomorrow, as that is apparently what is going down here. On TradingView, you know how it is. We like to cover on Webull and TradingView. TradingView traders just gives us a immaculate outlook on the RSI. And as you can see here, you've officially rejected the bull zone on the weekly RSI. Now, this is not what we wanted to see, because if you close today where you are today, or you close the week today where you are today, which won't happen, right? I do think you're going to kind of make your way back up here. Hopefully, if freaking markets allow, right, you'll close a hangman or a doji here. But you want to see this come back up, right? But even if you don't, retesting the 50 line on the RSI would be significantly bullish here as you see this momentum begin to curve back up. Just looking back to our previous runs, you didn't do that, right? You actually rejected the 50 line, came back down, made a touch of bullish divergence, and then blasted through. But traders, I have good news, right? I have great news, actually. Go to the daily time frame and take a little peeky weeky with me. Pay close attention, because I'm about to show you something that is phenomenal, right? Oftentimes when you make these dramatic drops, now we talked about bearish divergence on the daily time frame and how that can often play out, right? You need to see this thing reset, and what you're doing on the daily time frame is you are resetting at a much faster rate, right? Look at where you are on the stock, right? Look at this uptrend that you've been in, and now look at down here on the RSI. Look at this higher high on the stock price between April and then, between these 2 days, 3 days, right? Wednesday and then Friday. Friday, you make another higher high. That's bearish divergence 1. This back in June, you make a higher high June 1st of 2026. You make a lower high on the RSI. You did it again, right? Higher high, lower high, or equal high equals bearish divergence on the daily time frame. You've seen that play out today. So to get that out of the way is actually really, really nice. But when you zoom in on the RSI traders, if you're with me still, you've made a touch of hidden bullish divergence. Now, what is hidden bullish divergence, guys? For everyone in the chat who trades actively, what is hidden bullish divergence? What is it, right? Hidden bullish divergence is extremely strong, usually in the short-term time frames, in which you see the stock make a higher low on the stock price, but a lower low on the RSI. What this means is the stock is holding strength relatively on the price, but resetting on the RSI to then make higher freaking highs. Oftentimes that is the case. I can give you a great example if you're paying attention, right? Look at IWM. IWM, we've called it every step of the freaking way. But what we called specifically is multiple touches of hidden bullish divergence, guys. Look at the stock back, what was it? Back here, right? Equal lows, significant lower low on the RSI. That hidden bullish divergence led to a spring and another all-time high. And then what did you have back here? That's a higher low. This is pretty much an equal low or slightly higher low. Another touch of hidden bullish divergence. And I believe there was one more time in which that happened. This was just textbook bullish divergence here on IWM, as you saw a higher low and a lower low there. But just to give you guys an example, right? That is a great example of what AMC could potentially do here on the shorter time frame on the daily, as you put in and post this hidden bullish divergence, right? You want to see this thing open up tomorrow green, and you want to see it start to enter above the high of the day, which currently sits at 215, right? If you get above 215, guys, this thing is now trading back into what would be that gap. And oftentimes, traders, once you move into the gap, the stock will move very, very quickly. Let's say we get the announcement tomorrow, the capital raising is over, AMC has raised $200 million like that. You're going to see this thing probably move very, very quickly. In the case that you don't, right, there's always the opportunity that you go lower and you slice through the 50. That would not be a good sign. I really just want to see this hidden bullish divergence play out. I want to see you bounce out of this range, and I want to see you retest the daily 50 line for the first time, traders. Let's try to track back and see if you've done it any time recently. Let's see. Before a big run up. You did it here, right? Broke above, retested, and then you saw this thing go from $4 up to about $6. But a lot of the times you'll see it retest on the daily time frame, the 50 line. But honestly, traders, I'm kind of just glad that you've gotten the bearish div out of the way for the short-term time frame. And you can begin to look and start fresh here on AMC on the daily time frame. One thing that I'm not happy that we've rejected here, and we're now back underneath this previous support trend that flipped into resistance back in November, and now you've lost again. Not a great look, right? You want to hold above this previous uptrend. And I expect it to be resistance as you go back into 250, because we know 250 is going to be stubborn. But yeah, weekly time frame, you're making a bearish engulfing candlestick formation right now. So if that held, right, there's the expectation that we would continue down into this uptrend that would probably be around 175 by the time you get there. Let's see what else. Monthly time frame. What does that put us on the monthly? God. Get rid of some drawings here. Monthly time frame, that does give you a sizable wick, but you have officially printed your highest volume node since all the way back post squeeze June of 2024. I expect this to continue to rise as volatility increases off of this share offering, and if you can close this closer to 250, I am significantly bullish here. And regardless of what happens, traders, this is the funny part of it all. This is noise, right? This is absolute noise in the making, because when you look at, right, take a little peeky weeky with me, look at, what's the volume? Look at the quarterly time frame, right? Look at what you are doing on one of the largest time frames in AMC's entire history. You are printing a quarterly bullish engulfing candlestick as you get more volume than the previous quarter. That is bullish, guys. So when in doubt, continue to zoom out, right? And hopefully that brings some clarity to you guys, because like we talked about, if I pull up the MACD, one of my favorite indicators in the market, you can see here that the MACD is crossing green for the first time since 2021. This is the last time you got it crossing green. You saw 400% candle, 455% candle. So regardless, if you close higher than 98 cents, you're good. But of course, right, of course you'd want to close above the high of this wick that's currently at 179. So close June above 179, traders. I am still heckishly bullish on the macro of AMC, and I'd like to see that occur, right? Let's go back to Webull here, and let's look at the weekly time frame. Yep. So in the weekly time frame, we know that we're currently inside of this falling wedge formation, right? And we know that that might take more time. You may even see another lower low. I seriously doubt it, but that is possible. A break above 318, which we talked about being that breaking threshold for this falling wedge, would lead you pretty quickly to 566. And so I still remain bullish on AMC that you should see a breakout of this falling wedge. Now, whether or not you see the full extension, traders, God only knows, right? Because the full extension is an absolutely wild one, putting together June and January squeezes, upwards of wherever you break out from, right? Whether or not it's next quarter or the quarter after that, could potentially take you into the hundreds. Now, that seems unrealistic, I know, but just taking into account the January squeeze, which was a totally different time in AMC's history. You were much, much worse off back in March of 2021 than you are now, and you saw prices upwards of $110, right? Taking that into account, I think it's possible you could reach 100, but likely, in my opinion, you go gap hunting, right? I do expect this gap to fill at 273, and I do expect the gaps above you to fill. The question is when, traders, not for me, right? Not financial advice. I'm not a financial advisor. But for me, the question is not a question of if, it's when, in my opinion, when you're going to fill the gap currently sitting at $13, $19 from this slide down of the AMC ape conversion, and then $43 as AMC continues to improve its fundamental capacity and actually post amazing earnings. You should see this thing go on a little bit of a tear here. And if you enter this liquidity zone, right, enter this slide down, traders, we've gone over it once, we'll go over it again. This is where AMC runs the hardest, right? This $10 to $100 territory. Just looking at the horizontal lines, right? Just delete this one and delete this one. Look at what happens when you get above $11, right? Oh. Look what happens when you drop below $43. Dump, right? And so when you see volume move this hard in between these horizontal resistance and supports, it's likely, traders, with all the technical gaps and the lack of volume in this uptrend or this downsloping and upsloping price, it's likely that you see price move that volatile again once you get back above $10. But there's many resistances along the way. And step one is getting this golden cross. So that's why we say we got to get it, right? We got to hold above the 200 at 198. All right. Don't click off the video. GME, baby. GameStop. Closing the day with an inverted bullish hammer candle as you come in to this downsloping support line. You should see price come back up here. If you don't, expect to tap this 2050 territory on this double bottom. That would be a new uptrend of support, and you would theoretically, right, break below this downsloping support trend line. But I do think you're going to find a nice bounce here off of this downtrend, because of your candle close, right? The inverted bullish hammer candle is a bullish reversal signal. And when you go to the weekly candle, right, you've now traded 1, 2, 3 weeks in a row, pretty much nothing burgers on lowering volume. This is a good sign for the bulls. And when you go to trading view, right, let's pull up GameStop, GME. When you go to trading view, you can see you are within a falling wedge on the daily time frame. Now go to the 4 hour. It's very evident, right? You've worked your way down here. You filled your gap, and now you've pretty much hit the bottom of this wedge, as well as completed this shoulder, head, right shoulder price action. So if we see this breakout, traders, it's likely that GameStop retests this 2250 territory. And if you see a break of this neckline that currently exists at about $22.56 or $22.70, it's likely you see the full extension. Full extension is take the head to the neckline, place that on top of the breakout, and that is 25 freaking schmeckles, guys. That would be a sizable move on GameStop and hopefully get you out of this long, very, very long consolidation pattern in which you've kind of made a beautiful inverted head and shoulders. And, right, seeing that breakout gets you out of this long, very long consolidation pattern in which you've been trading in since January, guys. It's been forever, right? But hopefully a breakout from that gets you finally the technical profit target of this bull flag, which gets you upwards of $28. And if you break out of $28, traders, hopefully it gets you a break of this much larger shoulder, head, right shoulder, which the neckline is $28, and that would theoretically take you up to $36. And if you break above $36, traders, that would hopefully take you out of this freaking not falling wedge, this bull flag that you've been in for 2 freaking years on GameStop, right? 2 years on GameStop you've traded within this bull pennant, trading sideways, which theoretically gets you, depending on where you break out, a freaking trading price target of about $120, traders, the previous all-time high. In case you're wondering where I got that from, that is taking the full flagpole move, putting on top of the breakout of this bullish pennant. That would theoretically be your price target, but I expect absolutely nothing to happen until you see something develop with Ryan Cohen and eBay. This thing has been blue balling everyone because the market, more than fear, hates uncertainty, guys. And with GameStop, you got a whole heck of a lot of it, right? And unfortunately, that's just the reality. But if you make a bet here, you're betting on the long-term trajectory of the stock. You're betting on the earnings, 7 beats in a row, and the cash flow, traders. The freaking cash flow on this thing is absolutely outrageous, right? So theoretically, that's what we like to say. Theoretically, if you see this thing break out into the breakout, into the breakout, into the breakout, you could see some pretty crazy momentum here. But it all starts with the first breakout, and you got to break out of this falling wedge. So if you see that tomorrow, traders, step 1 of probably 6. But that's our technical analysis on GameStop here. I freaking love the stock. Now looking at the GME warrants, the beautiful, the ugly, the disgusting, right? The volatile GME warrants for my boy, Only in Paradise. If you guys don't know him, he is very active in the comments. This man is an absolute legend when it comes to our channel. And you made a new low today on the GME warrants. You've pretty much tapped this horizontal trend line and closed slightly below it, although you are now creating what is a falling broadening wedge. What is a falling broadening wedge? It is downsloping support and downsloping resistance, but it is a little bit of an expansion between the two, right? And you've seen this now tag it and close at the low. Your worst case scenario, you lose 250. If you lose 250, traders, you're going all the way to the all-time low at 225. You don't want to do that, because not only was today's close pretty abysmal, right? You saw this thing close at the lows and create a shooting star candle, but you're actually up 3.57% after hours. That does give me hope. That makes me think that this is a big fat bear trap, and that the technical profit target of this falling broadening wedge is that full extension at 5 freaking schmeckles. Now, do what you want, right? I am not a financial advisor. I don't even pretend to be, so don't take this as financial advice. That is a freaking phenomenal potential swing trade there. And honestly, if you see this thing open up green and potentially see a bounce here, invalidating this shooting star candle, that is the only way in which I would strike along on this position, right? You want to see this outperform the previous day of down 5.26%. Otherwise, you're freaking cooked, right? But I don't think you will be. Truthfully, traders, I don't think you will be. You're kind of seeing this just this regular head and shoulders play out here. And the profit target from such is taking the head to the neckline here, putting it on the breakdown of this horizontal resistance. That takes you theoretically to about 210 on this dump, right? To 215. So if you see the full extension off of this head and shoulders formation and you don't bounce here, which you definitely need to, expect it to make a new low at about 215 to 210, right? But on the weekly time frame, still on 1, 2, 3, 4 weeks of depressive volume. So if this thing was going to bounce, it's going to be this week, right? If you don't see a bounce this week, you're kind of fucked. You're not in a good spot, right? So you need to see this thing bounce right now. Taking a little peeky weeky at IWM because we do love covering the broader markets. You've seen a retest, a throwback of the previous falling broadening wedge that is bullish. So now as soon as you break out of this previous downtrend, right? As soon as you break that downtrend, traders, I'm expecting all-time highs. I'm expecting $300 on IWM as our thesis has always been, right? We have remained consistently true to what we have held for about 8 to 6 months here on this channel. So I think that's pretty much wraps it up, guys, for you. I hope you guys enjoyed our long due diligence on AMC, GameStop, and the GME warrants. So if you guys did, right, slap the subscribe button. It would mean a lot to us as we look to get 5K subscribers. That is our next landmark, right? 5, 10, 15, 50, 100, right? We're going to keep uploading every single day. So as always, traders, God bless you and your families. And remember, if you take anything away from this video, take this. The best is yet to come. I truthfully believe it. Let's freaking go, apes. Woo!